Hi, you are listening to Equity Master's Stock Market Wrap-Up. This is Rini Mehta and I am back to update you about the stock market movements and major economic developments that moved the markets this week. Let's begin with a quick look at the key stories that I will cover in this week's podcast. Petrol prices amid oil and rupee woes, Fed rate hike and its impact on Indian economy, IPO activity this week, IL&FS Group's cash crunch and Yes Bank's troubles, and top sectors and companies that swayed the markets this week. Now a quick look at broader cues. Indian share markets remained under pressure this week as buying sentiment remained subdued amid liquidity concerns in the NBFC space. Investors also remained on the sidelines ahead of the US Federal Reserve's policy outcome as well as expiry of September derivative contracts on Thursday. Market participants found little cheer even after the government raised import tariffs on select goods and the central bank announced measures to ease liquidity concerns earlier this week. With the markets out of the way, let's look at the key stories in focus. Shares of select consumer durable companies fell on Thursday after the government raised import duties on 19 essential items including refrigerators, air conditioners and jet fuel. Well, with this, Voltas and Havells India fell the most. Aviation stocks also slipped as the government imposed an import tariff on aviation turbine fuel. Oil prices are seen rising all over the country as the rupee continues to underperform amid rising crude oil prices. And petrol prices in Mumbai hit rupees 90 per litre mark for the first time ever this week on the back of a weakening rupee. The rupee is under pressure due to a strong dollar and high oil prices. Similarly, the spillover from the emerging market turmoil in Argentina and Turkey is weighing on the rupee. The falling rupee is also triggering sales of bonds and stocks, which in turn is further pressurizing the rupee. Nevertheless, last week the government announced several measures. This includes cutting down non-necessary imports, removal of withholding tax on rupee-denominated bonds, and easing overseas borrowing norms. That said, in the near term, the rupee being under pressure could benefit export-oriented businesses. Now moving on, the US Federal Reserve raised interest rates on Wednesday and left intact its plan to steadily tighten monetary policy as it forecast that US economy would enjoy at least 3 more years of growth. Fed policymakers lifted the benchmark overnight lending rate by a quarter of a percentage point to a range of 2% to 2.25%. The US Central Bank still foresees another rate hike in December, 3 more next year, and 1 more increase in 2020. So how does a US interest rate hike affect Indian investors? The instant effect is foreign money moving out of India's vaults. This means a slight correction in the share market in India, though temporarily. While this might provide a good buying opportunity in long-term stocks, the main thing to look forward would be capex and earnings trends. In the end, Indian investors are better off staying informed about the corporate earnings revival than Fed rate hikes. In the week gone by, we saw a lot of IPO-specific activity. State-owned railways engineering and construction firm Ircon International made its weak stock market debut after a good subscription to its public issue. Meanwhile, the IPO of housing finance company Aavas Financiers was subscribed 97% on the third day of bidding on 27 September. And state-owned Garden Reach Shipbuilders and Engineers IPO was subscribed 72% on the fourth day of bidding. The last day for the issue was extended till October 1st. And to know our view on these IPOs, you can read the IPO analysis on Equity Master IPO page. Moving on, Yes Bank's shares were under selling pressure this week due to a lack of clarity and expectation of delay on the new CEO appointment, near-term trend, and the current liquidity position in the economy. Well, Tanushree Banerjee, co-head of research at Equity Master, had been concerned about the quality of lending and management's approach in provisioning for non-performing assets. After Friday's crash, she views the situation differently and has published her latest view on Yes Bank. Just log on to stockselectoffer.com. But as you know, Yes Bank was not the only one at the heart of Friday's market panic. The elephant in the room was the NBFC sector. Several NBFC stocks came crashing down on Friday, DHFL being the leader of the pack. Housing finance companies came under sudden heavy selling pressure as interest rates on their debt spiked. Meanwhile, LIC on Wednesday said it will not allow debt-ridden IL&FS to collapse and explore options to revive it. There are concerns that the defaults by IL&FS could cause a contagion in the Indian financial sector. Ever since the news of IL&FS default was made public, Sensex and Nifty went on a 5-day downward spree. There was a chaos in the bond market as people thought if a company with such a huge debt is about to default, then what does it say about the condition of liquidity in the market? As Tanushree says, and I quote, "Once liquidity dries up, these NBFCs will find it difficult to finance their business. Their cost for borrowing fresh funds will increase. This will badly impact their profitability. Corporates too will find it difficult to raise money from NBFCs. Funding for infrastructure will take a hit. A slowdown in infrastructure growth means poor connectivity and slower pace of development of non-metro cities. IL&FS has consolidated debts of close to rupees 1 trillion, of which it has defaulted on close to rupees 10 billion. Imagine the domino effect if it can't pay the balance. So if a restaurant owner blames IL&FS for his business slowdown, don't be surprised." Unquote. As per Tanushree, for a value investor, this is a typical be greedy when others are fearful scenario. Amid the negative sentiment, she has recently recommended a stock in Stock Select which fits this criteria perfectly. And if this panic continues, there could be more quality opportunities with reasonable margin of safety coming her way. So just log on to stockselectoffer.com to grab some safe stocks in such times. Well, that's all from us today. Now before I sign off, I would like to know whether you like our podcasts. Is there anything specific that you would want us to cover? We would love your feedback. Just visit equitymaster.com and drop us a line. We look forward to hearing from you. Thank you.